Buckle up, everyone. It's time for a deep dive into the 2024 global economy.
Oh, yeah. It's a wild ride.
And our roadmap for this adventure is, well, it's a YouTube video.
A YouTube video.
Yeah. It's called Understanding the 2024 Global Economy in One Go.
Catchy.
It's from a channel called Linen.
Okay.
And it's not your typical, dry economic analysis.
No.
No. Think data meets storytelling with a dash of humor.
Oh, that's interesting. It's a surprisingly refreshing take,
Yeah.
for sure.
Yeah.
And the video is like central theme of resilience. You know?
Resilience.
It really sets the stage.
Yeah.
Like you'd think with, all the crises we faced.
Yeah.
Pandemic hangovers, the war in Ukraine, inflation, and those crazy interest rate hikes.
Yeah.
You'd think the global economy would be on its knees.
Yeah, totally.
But it's,
It's still chugging along.
it's still chugging along. Exactly.
Right. It's like we were expecting, a full-blown economic apocalypse. But instead, things have been kind of surprisingly stable. But hold on. This isn't just like a story about steady growth.
Right.
There are some really unexpected twists and turns.
Like what?
Like the U.S. economy is on fire.
Yeah.
Defying all expectations.
Really defying them.
Totally. And Japan, after decades of economic weirdness,
Right.
is finally starting to look kind of normal.
Normal.
Would you agree?
Yeah, I would.
Yeah. And then you've got China
Oh, yeah, China.
pulling out all the stops with these massive stimulus measures
It's huge.
to try to boost its lagging consumer spending.
Yeah, they're working hard at it.
It's like watching this high stakes economic poker game.
Oh, yeah.
And everyone's just waiting to see who's holding the winning hand.
For sure.
So, okay, let's break down this economic thriller.
Yeah, let's get into it.
The video kicks off by highlighting two major themes that shaped the year.
Okay.
Global elections and a big shift in interest rate policies.
Okay.
So election-wise, we saw this
Yeah.
global swing towards populism and right-leaning governments.
Right.
Except, of course, in the UK,
Ah, yes, the UK.
where the Labour Party swept into power.
Yeah, that UK election was a real head-scratcher.
It was.
It makes you wonder, if maybe the global shift towards populism,
Yeah.
it's more complex than it appears at first glance.
Absolutely. And then there's the whole interest rate saga. Remember all those aggressive rate hikes in 2023?
Oh, yeah. Everybody remembers those.
Well, it seems like most central banks finally hit the brakes,
Yeah.
as inflation started to cool off.
Right. It was a major turning point. You could almost feel the collective sigh of relief
Oh, yeah.
as those rate cuts signaled this shift,
Away from.
Yeah, away from that intense inflation fighting mode of 2023
Right.
and towards this more cautious approach focused on supporting growth.
Okay. So now let's zoom in on the U.S.,
Cool.
this is where things get really interesting.
Right.
The video paints a picture of the U.S. economy as a total rock star.
Oh, wow. A rock star, really?
Yeah. Exceeding expectations for 2 years running.
Yeah.
And basically leaving other developed nations in the dust.
Wow. Okay.
But here's what's really puzzling.
Okay.
How is the U.S. economy thriving with those high interest rates we were just talking about?
That's a great question.
Right.
And the video points to a few key factors.
Okay, look what.
Well, remember all those savings people piled up during the pandemic?
Yeah.
That's part of it.
Okay.
And then there's the increased leverage.
Yeah.
Many took on before rates started climbing.
Okay.
Plus the impact of immigration
Oh, yeah.
and the wealth effect.
Okay.
Basically, when the stock market's doing well,
Yeah.
people feel richer and they spend more.
Right.
Yeah.
Yeah, it's like this perfect storm
Yeah.
of positive factors
Yeah.
kind of coming together to create this economic anomaly.
Yeah.
Right? But even with that, you'd think those high interest rates would have, put a damper on things.
Yeah, you'd think so.
The video even mentions this analogy
Yeah.
that J.P. Morgan Chase is fond of.
Okay.
The boiling frog.
The boiling frog.
The boiling frog. Yeah, think of a frog in a pot of water.
Right.
If you slowly turn up the heat,
Uh-huh.
the frog won't notice the danger until it's too late.
Oof.
Right?
Yeah.
So in the economic context,
Yeah.
it suggests that, these risks
Yeah.
might be gradually building up without us realizing it.
Oh, interesting.
So are we saying the U.S. is a frog in hot water?
Well, not necessarily.
Okay.
The video argues that the expected economic downturn hasn't happened.
Right.
Because the U.S. economy has shown this remarkable resilience.
Okay.
But, and this is a big but.
Oh, a big but.
There are still some underlying vulnerabilities that we need to watch carefully.
Got it. Okay. I'm getting some serious economic suspense vibes here.
Me too.
And speaking of surprises, the video drops this mind-blowing stat.
Okay.
U.S. corporate profits hit a record high in 2024.
Wow.
The highest in 70 years.
70 years.
70 years. How is that even possible?
It's a striking number for sure.
Yeah.
The video attributes this surge in profits to post-pandemic inflation.
Okay.
It seems companies were able to increase their profit margins, essentially passing those increased costs onto consumers.
Oh, I see.
And what's really interesting is that European and Asian companies haven't seen the same level of profit growth.
So is the video implying that, like, a little bit of inflation might actually be a good thing? I mean, I always thought inflation was, like, the enemy.
It's a complex issue.
Yeah.
But the video does suggest that moderate inflation can have some benefits.
Okay.
It might incentivize companies to invest and expand, ultimately leading to economic growth.
Right.
However.
I knew there had to be a however.
There's always a however, right?
Right.
We need to be mindful of the potential downsides.
What are we missing here?
Well, one of the downsides of those skyrocketing corporate profits is the widening wealth gap.
Oh, yeah.
In the U.S.
Right.
The video highlights how this profit surge has disproportionately benefited large corporations, further concentrating wealth in the hands of a select few.
Right.
And this growing disconnect between strong economic data and the lived experiences of many Americans is a major concern.
It's like this tale of two economies.
Yeah.
One booming for those at the top,
right,
and another struggling to keep up. And to make things even more complicated, we have to factor in, like, the U.S. election.
Right.
And the return of Trump.
Yes.
The video suggests this, like, added this whole new layer of complexity to the economic outlook.
Oh, yeah.
So what do you think?
Well, Trump 2.0's policy pronouncements.
Yeah.
Like tax cuts.
Yeah.
Deregulation. A protectionist stance on trade.
Yeah.
And tighter immigration policies.
Right.
All have the potential to rock both the U.S. economy and global financial markets.
Yeah.
What's important here is that the video explores both the potential upsides and the potential downsides of these policies.
Right. It's not a one-sided argument.
It's not a one-sided argument, no.
Right, because there's always that risk of, like, unintended consequences.
Always.
Especially when it comes to sweeping policy changes.
Right.
And let's not forget the big elephant in the room, the potential for reinflation. Trump's proposed solutions, like boosting oil supply, haven't exactly calmed those market jitters. The video even mentions that Bitcoin prices
Bitcoin
went through the roof after his election.
Really?
Yeah.
Wow.
Maybe because people think his policies will be good for crypto.
It's all about, market sentiment and how those perceptions translate into real-world economic activity.
Right, right.
And we can't underestimate the potential impact of trade wars.
Oh, yeah.
And how global supply chains might be reshaped.
Yeah.
The video even references a Harvard Business School study that describes this shift from globalization to what they call the Great Reallocation.
So instead of a complete decoupling of economies, we're seeing this, like, reshuffling of global supply chains. Right. Right. It's like everyone's trying to figure out their new place. In this evolving economic landscape.
Exactly. Exactly.
And speaking of potential risks, remember all the talk about the U.S. commercial real estate crisis?
Oh, yeah.
The video uses the example of the 1407 Broadway building in New York.
In New York,
to illustrate how this whole thing's playing out.
Interesting.
Yeah.
So what happened?
Well, it's a perfect case study.
Okay.
Because it highlights the role of CMBS.
CMBS.
That's commercial mortgage-backed securities.
Right.
In this whole crisis.
Okay.
The default of that building even though it had a AAA rating.
Oh, wow.
Sent shockwaves through the CMBS market.
Yeah.
And exposed the vulnerability of a lot of small and medium-sized banks that hold a significant chunk of these securities.
Right.
So is the video saying the crisis is over? Or are we still in the danger zone?
It's not a clear-cut answer.
Okay.
While the risk has definitely decreased, thanks in part to the Fed's interest rate cuts, the losses are real.
Yeah.
And the possibility of a domino effect impacting the broader economy is still something we can't ignore.
Okay, so that's a sobering thought.
It is.
And before we shift gears, the video drops another bombshell, a warning about the looming threat of the U.S. national debt.
Oh, the national debt. Yeah. It's like another one of those boiling frog situations.
Right.
The gradual accumulation of debt might not seem like a big deal in the short term.
Yeah.
But it could have major consequences down the road.
It's like a slow-burning fuse.
Yeah.
That could eventually, like, blow up the entire system.
Right.
Okay, we've covered a lot of ground on the U.S.
We have.
Let's pivot to Japan.
Japan, okay.
A country known for its unique, and let's be honest, sometimes baffling economic policies.
It's true, it's true.
The video highlights its seemingly, like, meh GDP growth in 2024, but it suggests there's more to the story than meets the eye.
Interesting. So what's going on there?
Well, what's fascinating here is that the data might be masking a positive shift in Japan's economy.
Okay.
It seems like it's finally starting to move away from its heavy reliance on government stimulus and central bank intervention, policies that have defined its economy for decades.
For decades, yeah.
The video doesn't hold back calling the Japanese economy deformed.
Oh, wow.
And pointing to things like negative interest rates and the massive scale of asset purchases by the Bank of Japan as evidence.
Wow. Deformed. That's pretty harsh.
Well, it's true that Japan's economic playbook has been, like, unconventional, to say the least.
It has. It has.
But the video makes this, like, compelling case that 2024 was a turning point.
Oh, okay, a turning point.
Yeah, we see signs of, like, positive change.
Like what?
Corporate profits are up.
Okay.
The stock market is surging, and inflation is back after years of deflation.
Wow.
And here's the real shocker.
What?
Japan decided to raise interest rates.
Yeah.
While everyone else was cutting them.
Wow, talk about going against the grain.
I know, right? What's the logic behind that?
Well, it's it's a bold move.
Yeah.
And it can be seen as a delayed reaction to global inflation trends.
Okay.
But there's another crucial factor at play.
Okay.
Japan's desperate need to stimulate wage growth.
Oh, okay.
The video highlights the importance of Shunto.
Shunto?
Yeah, that's Japan's annual wage negotiation process.
Oh, okay.
In determining the Bank of Japan's monetary policy.
So you're saying that wage negotiations are actually driving interest rate decisions?
Yeah, pretty much.
That's fascinating.
It is.
What are the potential implications of this divergent monetary policy? Could it backfire?
Well, it could trigger a repatriation of overseas assets.
Okay.
As Japanese investors seek higher returns at home.
Okay.
We might also see the yen strengthen,
right?
Which could hurt Japan's export competitiveness.
Okay.
And then there's the looming issue.
Yeah.
Of the Bank of Japan unwinding its massive balance sheet.
Oh yeah.
That's a wild card.
Yeah.
That could create some serious uncertainty in global financial markets.
Right. Okay, that's a lot to process on Japan.
It is.
Let's shift gears to Europe.
Europe. Okay.
Which the video calls the weak link in global economic growth.
Oh, the weak link.
The weak link, yeah. The focus here is on Germany.
Germany, okay.
A country that's historically been Europe's economic engine.
Right.
But now seems to be stuck in neutral.
Hmm.
What's going on there?
Well, Germany's facing a perfect storm of challenges.
Oh, no.
The energy crisis hit them particularly hard.
Yeah.
And their conservative fiscal policies, like the Debt Brake Act, have limited their ability to respond effectively.
Okay.
Add to that a rapidly aging workforce.
Yeah.
And you've got a recipe for economic stagnation.
Oh, no.
Yeah.
The video points out this strange irony.
Okay.
Germany technically avoided a recession.
Yeah.
Despite all its economic woes.
Really?
How how is that even possible?
Well, it comes down to the technical definition of a recession.
Yeah.
Which requires 2 consecutive quarters of negative GDP growth.
Right.
Germany managed to dodge that bullet.
Okay.
By alternating between quarters of growth and contraction.
Oh, I see.
But as the video humorously points out, no one really believes they're not in a recession.
Right.
It's like they're feeling all the symptoms without the official diagnosis.
It sounds like they need a new economic thermometer.
They do.
But jokes aside, Germany's problems seem to run deeper than just a temporary slump.
Yeah.
The video describes their challenges as structural, pointing to energy shortages, labor shortages, a declining demand for gas-powered cars, and even their rigid government structure as contributing factors.
Wow, they've got a lot going on.
Yeah.
It sounds like these aren't quick fixes.
No.
The video delves into the debate within Germany's ruling coalition.
Okay.
About whether to implement fiscal stimulus measures.
Right.
A debate that ultimately led to the finance minister getting the boot.
Oh, really?
Yeah, and triggered an early election.
So is there any light at the end of the tunnel for Germany? Or are they destined for a long period of economic malaise?
Well, the video ends its discussion on a rather pessimistic note.
Oh, no.
Highlighting the depth of Germany's structural problems.
Right.
And suggesting that a full recovery could be a long and arduous process.
Okay.
It's a cautionary tale about the challenges of adapting to a rapidly changing global economic landscape.
Right. Now, let's turn our attention to China.
Okay, China.
The video dissects its economic performance in 2024. Painting a picture of strong exports and stable investments, but with a glaring weakness.
Oh.
Weak consumer spending.
Yeah, sure, it's good.
What's really important here, as the video emphasizes, is to understand the logic behind China's economic policies.
Okay.
Rather than just getting caught up in the GDP number.
Like the logic behind the policies.
Yeah. So what's driving China's economic engine in 2024?
Yeah, good question.
If it's not consumer spending, then what is it?
Well, the key driver is net exports.
Okay, net exports.
Yeah.
Fueled by a rebound in overseas demand.
Okay.
And a global inventory restocking cycle.
Okay.
Basically, businesses around the world are replenishing their stockpiles.
Okay.
And China is perfectly positioned to meet that demand.
Right.
And this has led to this surge in China's exports, offsetting the weakness in domestic consumption.
I see. So they're exporting their way out of trouble.
Yeah, kind of. But let's dig a bit deeper into that weak consumer spending.
Okay. Yeah.
The video attributes it to low consumer confidence.
Okay.
And companies focusing on cutting costs. It sounds like a bit of a vicious cycle.
Yeah. How so?
Like people are hesitant to spend.
Right.
So companies tighten their belts, which further erodes consumer confidence.
Yeah, it's a downward spiral.
Right.
Right.
And that's where the Chinese government's aggressive fiscal and monetary policies come into play.
Ah, okay. Trying to bring that cycle.
Right. The video focuses on 2 specific policies aimed at stimulating consumption, issuing ultra-long-term special government bonds, and lowering existing mortgage interest rates.
Okay.
Wait a minute. How do those policies connect to consumer spending?
Yeah, it doesn't seem very intuitive.
Yeah.
It's a great question.
It's a great question.
Let's start with the mortgage rates. The goal here is to free up some cash flow for homeowners when their mortgage payments go down.
Yeah.
They have more money to spend on other things.
Okay, that makes sense. But what about those ultra long-term government bonds? How do they fit into the picture?
Well, those bonds have a dual purpose.
Okay.
First, they provide funding for infrastructure projects, which can create jobs and boost economic activity.
Okay.
Second, a portion of the funds raised is channeled towards programs that encourage people to trade in their old stuff for new consumer goods.
Oh.
A direct incentive to get people spending.
Ah, so it's like a 2-pronged approach.
Yeah.
Put more money in people's pockets and give them incentives to actually spend it.
Right.
Pretty clever.
They're trying to cover all the bases.
And these are just 2 examples of the many stimulus measures China has implemented.
Okay.
The video highlights the unprecedented scale of these efforts.
Really?
It's a It's a level of economic intervention we haven't seen in recent years.
So the big question is it working?
Right.
Is China's economy back on track?
Is it?
Well, the market's response has been somewhat muted so far, which suggests that, that the government might not have played all its cards yet.
Okay.
The video makes an interesting distinction between stabilizing and stimulating policies.
Okay.
Using the example of credit card debt relief.
Okay.
To illustrate the difference.
That's an interesting analogy. Could you elaborate on that distinction?
Sure. Stabilizing policies.
Yeah.
Like helping people get out of credit card debt are designed to prevent things from getting worse.
Okay.
They buy time and provide some breathing room for individuals and businesses.
Okay.
But they don't necessarily address the underlying problems.
Yeah.
Or spark growth.
Okay.
Stimulating policies, on the other hand,
are
more proactive. They aim to jumpstart the economy by encouraging investment, spending, and job creation.
Okay, so where does China stand now? Is it in, like, stabilization mode or stimulation mode?
Well, the video suggests that China is transitioning from a cautious, stabilizing approach to a full-blown stimulus effort.
Right.
The market is anticipating further easing of monetary policy, increased government spending, and continued efforts to stabilize the real estate market and boost consumption in 2025.
It's a lot to keep track of.
It is.
But it's clear that China is determined to get its economic engine roaring again.
Yeah, they are.
Speaking of the real estate market, that's been a major concern for China.
For sure.
The video acknowledges the deep adjustment period it's going through, and the decline in investments. It sounds like a pretty precarious situation.
It is, yeah. The cascading impact of falling housing prices on local governments, banks, and home buyers is, a serious issue.
Yeah.
The video highlights the long road ahead for the real estate market to recover, suggesting that stability is still a long way off.
Yeah, the video mentions some specific policies aimed at addressing this, like the 517 policies implemented in May 2024.
Yeah, the 517 policies.
Well, what are those all about?
Well, the 517 policies are a set of real estate stimulus measures designed to boost demand.
Right.
They include things like lowering mortgage rates and down payment ratios, making it easier for people to qualify for a mortgage.
Right.
And reducing transaction taxes and fees to make buying a home more affordable.
There's also that intriguing policy, the $300 billion affordable housing refinancing program.
Yeah.
The video made it sound like the central bank was like directly injecting money into the real estate market.
Yeah.
How does that even work?
It's a pretty unconventional approach.
Yeah.
The central bank is essentially lending money to state-owned enterprises to buy houses directly.
Wow.
Those houses are then rented out or converted into affordable housing.
Okay.
The goal is to revitalize the capital chain in the real estate market and prevent prices from falling even further.
It sounds like a bold move, but also a risky one.
It is.
Is it actually working?
Well, the video acknowledges the operational challenges. And the limited scale of this trial program.
Yeah.
However, it does suggest that if it proves successful, the program could be expanded in 2025.
So it's definitely something to keep an eye on.
For sure.
Okay. Yeah. So to sum it up,
we
have a Chinese government pulling out all the stops to stimulate its economy.
They are.
They're cutting interest rates, increasing government spending, and implementing targeted measures to boost consumption and stabilize the real estate market.
Right.
It's a massive undertaking.
It is.
And it will be interesting to see how it all plays out in 2025.
For sure.
But before we get ahead of ourselves, let's take a step back and see how some other notable economies performed in 2024 to make this global economic landscape easier to grasp. The video uses this car race analogy.
Oh, the car race analogy.
Each country is like a car with its own speed, strengths, and weaknesses.
I love that analogy.
That's a good one.
It makes it so much easier to visualize what's happening.
Me too. So who are the front runners in this global economic race? And Who's struggling to keep up?
Well, one standout performer is India.
India, okay.
With its impressive growth driven by government investments in infrastructure.
Okay.
It's like they've hit the gas pedal and are speeding ahead.
Yeah.
However,
the
video does flag a potential risk.
Okay.
Resurgent inflation that could derail their progress.
Oh, no.
It's like hitting a patch of ice on the racetrack.
Yeah, that's a great way to put it. And what about Russia? They've been facing intense pressure from Western sanctions. How are they holding up in this economic race?
Well, Russia's economic resilience in the face of those sanctions has been surprising, to say the least.
Yeah.
The video attributes this to their strong energy sector,
right,
and some aggressive government stimulus measures.
Yeah.
It's like they've managed to find a detour around those sanctioned roadblocks.
Yeah.
And this is a big but.
Oh, another big but.
The video also flags a sudden shift in Russia's economic outlook.
Okay.
In the fourth quarter of 2024.
Oh, what happened? Did they hit a wall?
Something like that.
Yeah.
The ruble started to plummet. Inflation reared its ugly head again.
Right.
And the government's policies took a strange turn.
Okay.
They were spending and investing aggressively.
Yeah.
While simultaneously jacking up interest rates.
Oh, wow.
It's like hitting the gas and the brakes at the same time.
That doesn't sound like a winning strategy.
No, it doesn't.
And you mentioned a shift in the fourth quarter. The video also pointed out that a lot of economies seem to experience some sort of volatility around that time.
You're right. It's like there was a collective mood swing in the global economy in the final months of 2024.
Okay, so we have India speeding ahead, Russia experiencing some turbulence, and what about everyone else? The video mentions a few other countries but doesn't delve into too much detail. Can you give us a quick rundown?
Absolutely. The video touches on the UK's steady economic recovery.
Okay, UK.
They seem to be cruising along nicely.
Yeah.
Then there's Turkey.
Oh, okay.
Battling inflation and trying to steer their economy through some rough waters.
Yeah.
South Korea's export-driven growth is keeping them in the race.
Yeah.
While Argentina, under President Javier Milei, is experimenting with some radical economic policies.
Argentina's economic experiment sounds particularly interesting. Can you tell us more about that?
Sure. Milei's approach is like economic shock therapy.
Oh, wow.
He implemented austerity measures.
Okay.
Slashed taxes. And embraced free market reforms.
Right.
It's like hitting the reset button on their entire economy.
Yeah.
The impact has been dramatic.
Okay.
A sharp contraction in 2024.
Yeah.
Followed by a predicted rebound in 2025.
Okay.
It's a high risk, high reward strategy.
It's like they're taking a gamble on a high-speed shortcut.
Yeah.
And before we wrap up this global economic tour, the video throws in one final curveball. A little-known country called Guyana. Tell me more about this mystery economic powerhouse.
Guyana is a small South American nation
that
has experienced explosive economic growth.
Okay.
Thanks to newly discovered oil reserves.
Oil reserves.
Their GDP growth rate has been averaging an astounding 40% over the past 5 years.
Wow.
And their GDP per capita has skyrocketed.
Wow, that is impressive. Okay, we've covered a lot of ground in this first leg of our deep dive. We've seen economies booming, struggling, and undergoing some radical transformations. It's like a global economic roller coaster ride.
It is.
And the video uses that car race analogy to sum up this complex landscape.
Yeah.
Highlighting the transition from a period of slamming on the brakes.
Yeah.
Remember those interest rate hikes?
Yeah, everybody remembers those.
To a new phase of hitting the accelerator with all those stimulus measures.
It's a whole new ball game now.
So as we look ahead to 2025, what are the key uncertainties that could shape this global economic race? Are there any potential roadblocks or detours we need to be aware of?
Well, the video identifies two major uncertainties.
Okay, like what?
The impact of Trump's trade policies, and the effectiveness of China's efforts to stimulate domestic consumption and revitalize its lending practices. These two factors have the potential to reshape the global economic landscape in the coming years.
Yeah, that's a lot to think about. But before we get too bogged down in the complexities of global economics, let's take a moment to appreciate the unique perspective this YouTube video offers.
Oh, yeah.
It's a brilliant blend of data insightful analysis and engaging storytelling, which makes learning about economics actually enjoyable.
It does. It's a great example of how complex topics can be made accessible.
Right.
And interesting.
Yeah.
Without sacrificing depth or accuracy.
Absolutely. And on that note, let's leave our listener with a thought-provoking question. If the global economy is like a car race, who will be the front runners in 2025? And what unexpected turns or obstacles might lie ahead? It's something to ponder as we head into this new year of economic possibilities.
It is. That's a question with no easy answers.
Right.
But that's what makes the global economy so fascinating to watch. It's constantly evolving, full of surprises, and never quite what you expect. And speaking of unexpected characters, this YouTube video, it did a fantastic job of showcasing some of the lesser-known players in the global economic arena.
Yeah, it did.
It's easy to get caught up in the drama of the U.S., China, and Europe.
Yeah.
But there's a whole world of economic activity happening beyond those familiar giants.
You're right. It's like discovering these hidden economic gems tucked away in this vast and diverse landscape.
Totally.
And who knows, maybe one of those hidden gems will become like the next economic superpower.
Yeah, that's what's so exciting about the global economy.
It is.
It's full of potential and surprises.
Totally.
And as this video so brilliantly illustrates, it's a story that's constantly unfolding with new chapters being written all the time.
So to our listener out there, I encourage you to stay curious, stay engaged, and keep exploring this fascinating world of global economics. It's a journey that's full of unexpected twists and turns.
It is.
But it's also incredibly rewarding.
Absolutely. And remember, it's not just about understanding the numbers and the trends.
Yeah.
It's about connecting those insights to the real world.
Yes.
The lives of people.
Yeah.
And to the future we're all building together.
Beautifully said. And on that inspiring note, I think it's time to wrap up this deep dive into the 2024 global economy.
It is.
We hope you've enjoyed the journey as much as we have.
It's been a pleasure exploring this with you.
Likewise.
And to our listener.
Yeah.
Until next time.
Yes.
Keep those economic engines running.
Keep them running.
And stay tuned for more fascinating deep dives into the world around us.
See you next time.